A very warm welcome to this first edition of VAT Update from Tax Essentials for Advisors. The idea is that these bite-sized VAT updates will be released fortnightly and will follow a similar, albeit not identical, format to the tax updates that are already being released in the intervening weeks. The structure will be to look at the latest developments in HMRC guidance and practice, notable case law developments, and other news such as legislative announcements. In this edition, HMRC News includes updates to HMRC's VAT guidance around correcting errors and accounting for VAT after cancelling your VAT number. In Cases News, we'll look at 3 cases, one from the Supreme Court that looks at VAT grouping rules and tax points, another that looks at alternative VAT recovery evidence when you don't have an invoice, and a case on the VAT treatment of locum doctors. Finally, in other news, Budget Day has been confirmed, triggering the normal speculation as to what might be in store from a VAT perspective. In HMRC news then, HMRC has updated its approach on correcting VAT errors. There were always multiple ways that you could correct VAT errors. Where errors are not deliberate and the net impact falls below certain thresholds, it was and continues to be possible to correct the error through the next VAT return. If you wanted or needed to disclose an error separately to HMRC, then the standard way of doing so used to be via a form known as the VAT 652 form. This form has now been replaced by an online form that can be accessed via your government gateway account. It appears to be part of a concerted effort to replace old-style forms with newer online versions. It also remains open to taxpayers and their agents to send corrections separately to HMRC in writing, by post or by email. In another development reflecting the move towards new-style online forms, HMRC has updated various bits of guidance concerned with accounting for VAT or recovering VAT after a taxpayer has already cancelled their VAT registration number. In certain circumstances, a business will need to either declare or claim back VAT when it is already deregistered. For example, in general, VAT can be recovered on services supplied after a VAT registration was cancelled if those services relate to taxable activities carried out at a time when the business was VAT registered. Previously, a lot of guidance referred to a form known as the VAT 427 for reclaiming VAT post-deregistration. Now, the guidance generally links to a newly published online form which can be accessed via your government gateway account and used to submit a claim or report VAT due. Moving on to look at case law, our first case of note is the Supreme Court judgment in Prudential. This is an interesting case that looks at the interaction between 2 sets of VAT rules. On the one hand, you have the VAT grouping rules. These rules allow certain companies under common control to form a group and not to account for VAT on services provided between them. On the other hand, you have the time of supply rules for continuous supplies of services. Under these rules, a tax point only normally arises when a VAT invoice is raised or a payment is received, whichever comes earlier. In Prudential, you had a performance fee for some fund management services, which only became payable after the provider of the services had left the VAT group, because the fund had met certain benchmarks. The Supreme Court found that there was a chargeable event when the success fee was issued or paid, despite the fact that the fund management services were actually performed at a time when everyone was part of a VAT group. VAT was therefore due. The case highlights how complex the interaction between different VAT provisions can be and how much care needs to be given to points like deciding whether and when to join and leave a VAT group. Another notable case is the High Court's judgment in hotel beds. It's particularly notable because it deals with an issue that can affect businesses of every type. What happens if you've incurred VAT on costs but can't get a supporting VAT invoice from your supplier? Hotel Beds was a company which purchased hotel rooms and resold them to travel businesses. It struggled to get VAT invoices from many hotels despite its best efforts. Normally, a VAT invoice is the key piece of evidence that a business needs to support its claim for VAT recovery. However, the law provides HMRC with discretionary powers to accept alternative forms of evidence. Hotel Beds thought HMRC was applying its discretionary powers unreasonably and made an application for judicial review, which is the process by which a judge reviews the lawfulness of a decision made by a public body like HMRC. The judge observed that there are various different parts of HMRC guidance which deal with when HMRC will accept alternative evidence, but that these were inconsistent and therefore not applicable. In the circumstances of the case, because there was no real suggestion of fraud and there were alternative materials that could demonstrate that had been paid, the application for judicial review was granted. The case is really important because it highlights issues with the consistency of HMRC's current policy in this area and underlines that HMRC is required by law to exercise its discretion both consistently and fairly. Our final case is a first-tier tribunal case on locum doctors. The question at the heart of the appeal is whether a supply of locum doctors is a standard-rated supply of staff for VAT purposes or is covered by the VAT healthcare exemption. In a detailed decision considering the interaction with the corresponding provisions of EU law, the tribunal determined that the UK exemption was wider than the EU one and that the provision of locum doctors was exempt. This decision could have huge ramifications for the locum industry, and the amounts of money at stake are significant. It's only a first-tier tribunal decision, and it wouldn't be surprising to see HMRC appeal, but locums and their customers should be considering their options now. And finally, in other news, the government has announced that the next budget will take place on Wednesday, the 26th of November 2025. As always, this is a cue for speculation as to what new measures this could bring from a VAT perspective. Some ideas that have been floated include lowering the VAT registration threshold and tinkering with the scope of VAT reliefs. Time will tell if any of this is more than just gossip. And that's all for this first edition of our VAT update. I hope you enjoyed it, and I look forward to presenting a further update in a couple of weeks' time.